The mining sector is going to take a hit. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I thought we'd have a look at this article from the ABC, and before you ask, don't worry, got my stein of coffee, because this is regarding the mining markets and the uncertainty as the coronavirus spreads. Now, we've seen, and I will bring up trading economics, everyone, we've seen the prices of certain commodities, well, shift quite drastically recently, and there are a few of them that I think are of importance to us here in Australia. Iron ore, we'll bring that one up. We can see we dove down from 96, hit at 80 bucks. We've recovered a bit, 88 at the moment, but also liquid or natural gas. Where is that? Nickel, aluminium. Come on. There we go. Natural gas. That's gone up to 185, but you can see where it's trending. Now, these are important export items, resources for our nation. Because once again, I'll jump back here to the Observatory of Economic Complexity. You can see the lack of complexity in our economy and the significant number of exports that are natural resources. I mean, look at iron ore, 48 billion. Coal, 47 billion. Petroleum, 20 billion. So we say we combined iron ore or coal, say iron ore, coal and petroleum, together they're about equal to our tourism sector of about 60 billion. Iron ore is going to take a hit. Coal and petroleum are probably all going to take a hit from demand from our major export destination, which is primarily China, as is our tourism industry. And I'm noticing all the ads for vMix software. That's actually what I'm recording this video on right now. So I'm quite a fan of the software. It's quite good. I don't have the 4K version yet because many of you have said in the comments, I was asking, should I bother upgrading to 4K? You all said, do not bother. Don't waste the money. I don't want to see your face in 4K. So, good point. I'm learning from that. Appreciate the feedback, everyone. So let's have a look at this, guys. Let's have a look at this. Australia's multi-billion dollar mining industry has taken a battering in recent weeks as the spread of the coronavirus continues to stall construction in China. Some importers have declared a force majeure clause, meaning unforeseen circumstances are preventing them from fulfilling contracts. ANZ senior commodity strategist Daniel Heise said liquefied natural gas, or LNG, markets were the most likely to be impacted by that type of activity. On the LNG side, we're seeing a lot of those declarations coming through, Mr. Heise said. The LNG market has been weak, and I think some consumers there in China are keen to cut back on their purchases. And that's a big chunk of the Queensland economy for one. And if you've seen North's and Adams' video discussing or interviewing with Campbell Newman and just discussing the state of debt in the Queensland economy, then you look at the Labor government's projections for employment and job growth. There's a nice little growing portion of their revenue coming from LNG, which may not exist if these type of issues continue. Basic metals like iron ore, copper and zinc have also taken a dive since detection of the virus. The main reason given for these price falls is the lack of construction in China, with entire cities effectively shut down. Mr. Heise said the feeling in the base metals market had changed dramatically since it reached a 10-year high in mid-January, with a possible resolution to the US-China trade war. The market has completely forgotten about that and is obviously focused on what's happening in China right now. It's going to be a long, hard road to recovery. To recover that kind of confidence again, it could linger on for a while. And, well, that lingering on for a while is what could potentially have an impact on the Australian economy, because it just flows through, guys. It can make a dent in our GDP growth. It might actually push us into a recession this coming year. So, stimulus package rallies prices slightly. Despite negativity in the market and forecasts as a result of the force majeure, metal prices did see an uptick this week. Iron ore rose to $88 a ton, up from a low of $79 a ton in early February, and copper is selling at about $2.60 a pound, up from $2.51 a pound. CBA commodity strategist Vivek Dar said those price rises were driven by talks of a Chinese stimulus plan. Mr. Dar said it was not clear what the stimulus would involve, but he understood it was related to infrastructure and logistics. Those new projects, on top of existing ones, are expected to boost demand for commodities, but particularly steel, he said. But there's still something that's more hopeful. Mr. Dar said policymakers would meet in March to discuss the stimulus, but with current disruptions to the steelmaking industry, he did not expect it to have a profound impact straight away. And coal exports remain strong. While the force majeure has stalled some sectors of the mining industry, coal seems to be trading as normal. Fat Profits resource analyst David Lexon said Australia's coal industry was under no immediate threat. They can't actually force majeure contracts because they do need to have the coal to actually feed the power stations, he said. Without the coal, there's no generation of electricity out of those coal-fired power stations, and the country would come to a complete stop. So gold spikes as investors mitigate risk. While uncertainty has grown in many global commodity markets as a result of the coronavirus, investors have started putting money into gold. So let's have a look. Let's jump here to trading economics and let's see the price of gold. We'll look at silver and platinum. So we have here gold. Well, yes, up to 1584 US a ton. And we'll go to a 10-year. Yeah, we still got a bit of room to climb to all-time high in US dollars. But it is reaching all-time high in many other currencies, including the Australian dollar at the moment. Which, let's jump back here and have a look. Australian to US, we're at 67. Okay, so we're up from 66. But we're not looking particularly strong, are we, guys? And gold is a method that you can use here to mitigate some of the declining value in the Australian dollar to try and hold on to some of your purchasing power. But I'd suggest it's also a resource that has a significant demand in Asia for its processing and use in jewelry and other things, so that can affect it too. Let's have a look at silver, the poor man's cousin for gold, sitting around 1768. You can see, we had that spike up recently over $19. Now around 17. So we drop down. Now it seems to be consolidating here. We'll see where it goes. Isn't it where gold follows, or where gold goes, silver follows? And platinum, there you go. Shooting up. I'm not following platinum that closely, to be honest. So we'll jump back here. Over the past 4 weeks, gold prices have risen about 2% to sit at $1,574 per ounce. Sandra Cloves from Subiton Associates said gold was always considered a safe port in terms of uncertainty. Gold price tends to thrive on uncertainty, Dr. Close said. Anything that usually upsets global markets financially and socially usually means that gold prices go up. Well, let's have a look at CoinMarketCap, and we'll have a look at Bitcoin, because many people are also moving into it as another method to hedge. I remember when Zimbabwe had problems, the value of Bitcoin shot up significantly. We'll have a look here. How's it doing? It's at 10,000 US at the moment. And you can see here it's also climbing up quite significantly in recent times. Have a look at that, guys. Not at the 20,000, but it's back up again. Wonder if it'll shoot up again and the FOMO will jump back in. So, what have you done? Have you invested in gold? Have you invested in silver? Are you going into precious metals or crypto as a way to try and mitigate the decline in the Australian dollar or the resource sector? Or are you just waiting to see what would happen? Let me know your thoughts and opinions in the comments below, guys. But I think there's one thing we can all agree on. This is definitely going to have an impact on the Australian economy, and it's going to increase the chances of a recession happening here this year. Thanks for watching. Please like, share, and subscribe. If you're a fan and want to help us a little bit extra, there are a few ways you can. You can join the channel here on YouTube. You can support us on Patreon. We also have affiliate links with Amazon, eBay, Independent Reserve, and Kucoin, where you can join and we get a share of your transactions. Doesn't cost you a cent. We also have merch on the HeiseSays website. Pocket Square's perfect for your next function, and PayPal if you want to support us that way. Thanks to everyone who's helped. It allows me to buy new equipment and invest in the channel, make more content. I really appreciate it. Take care, guys. Have a great day, and I'll see you next time. Bye for now.